We need to talk about these two stocks that combined make up $60,000 of value in my portfolio, being the future growth drivers. And of course, we're talking about Take-Two Interactive that just posted earnings, a negative 2,000 something percent loss, being the parent company to Rockstar Games, the next media empire, the new metaverse. We're talking GTA 6, baby. We got to talk about Google as well, man. The most argumentative company on the planet, because will their search, their advertising business truly be disrupted by large language models and new AI? Well, how long will I hold this stock? Why do I hold it? Because I'm not 100% bullish on it, but I'm going to answer all of those questions and more. So if you are on a path to financial independence, if you damn well one day want to retire early and you're a squirrel looking for a nut as much as I am, go consider hitting that subscribe button. Joining me on this journey, folks, because firstly, Take-Two Interactive holds a special place in my heart because I grew up on video games. I remember just, basically just bludgeoning people in GTA. I mean, as far as back as GTA 3, Vice City, even the original one that had like that bird's eye view going on, but they just posted earnings and the stock's down like 1% in after hours. It fluttered pretty low. I think it dropped as much as 5% because they missed majorly on earnings per share, but who really cares? We know the granddaddy of returns from this company is in the future. It's next year. It's this GTA 6 game where analysts are severely under anticipating how much damn money this is going to print. This is going to be the first game where there's going to be tens of millions of active online users. Remember when GTA 5 came out? There was no online multiplayer until like 2 years after its release. When this drops day one, whoo, man, the online players are probably going to be nuts. I can't imagine the server expenditures just to support that shit, but the game is not here yet, folks. And some of that is priced into the stock, but I think it's not fully priced to any major extent yet. Though it is trading up 26-27%, the CEO has promised us multi-year growth ahead, and they did not include the guidance of GTA 6 in earnings. Smart on you, buddy, because you'd have missed dramatically if it wasn't for that. But they do have some other releases I don't care about. Child's Play, in comparison to what GTA 6 will be. And those are the 2K games they recently launched. A lot of people, streamers, Dr. Disrespect, streaming a lot of like golf and stuff like that from the parent here, to Take-Two, which did equate to some pretty decent earnings overall. They're saying we achieved outstanding results in 2025 fiscal year, with basically each of our labels contributing meaningfully to our performance. And you can see here that their net bookings grew 17% to 1.58 billion as compared to 1.35 billion during last year's fiscal quarter. So double-digit growth on the revenue itself. However, we can see GAAP net loss was $3.73 billion, a $21 per share. Jesus, that's a huge drop as compared to $2.9 billion or 17 per share for the comparable last year. This company's just burning capital, but not for what you think. Basically, they're just writing it off as impairment charges, and they're saying $3.55 billion were related to goodwill and $176.3 million for acquisition-related intangible assets. Nothing crazy. This company has been writing off capital, burning through it like there's no tomorrow for years now. I mean, at least for a year or two, based on what I've seen. So I'm not like, I don't care about any of that, because the second GTA comes out, they're going to be profitable by like 5+ billion probably in the first quarter that game releases, because they'll make 10 or 15 billion. Come on, we don't even know what they're going to sell in game. So I'm just sitting here looking at this being like, look, I planted my flag. I got to lay back for a year, lay low. Who cares what the stock does in the meantime, and presume that this has the real potential to be a $60 to $80 billion company on the low end, and maybe $120 billion if the hype really comes on the high end, offering maybe a 2x 3x return from here if you're super lucky. It was better buying it around that $30 billion value. Hopefully we come down a bit if you want to actually pick up some shares. Now, Google, why am I holding this company? The cheapest S&P Mag 7 stock, trading at a price to earnings multiple right now, virtually never seen in the publicly traded history of this company. My God, I still think it deserves a $250 price target if you believe what Google says over the media itself, because they're claiming that ChatGPT, the market share is being eaten away from their search. And I'm going to tell you that it is, and it's one of my major concerns, but not in the way you might think, because Google released this press release May 7th that we continue to see overall query growth in search that includes an increase in total queries from Apple devices and platforms. More generally, as we enhance search with new features, people are seeing that Google search is more useful for more of their queries, and they're accessing it for new things and in new ways, whether from browsers, the Google app, or using voice or Google Lens. Now, I want to roll back and tell you that the biggest disruption that I think is happening to this company today is the Google network. And I want to explain to you what the Google network is. But before I do, we got to just ask ourselves, when did ChatGPT come out? When was this revolutionizing and stealing all this demand from the market, which I don't think it's doing. What I think it's doing is expanding the demand for the search market, because people are searching for more. At least that's what Google is saying. Rather than just looking for one thing, you can just keep asking it things, and people are actually utilizing these tools more and more, expanding the entire space. But it is disrupting Google's network. But on November 30th, 2022, that is when ChatGPT came out, right around this period right here, right when we came through the inflationary crash, the interest rate cycle, and this was a rough period for Google. So it came out right toward the end of the year, where we probably started seeing some disruption at the first quarter of 2023. And those are the numbers I've pulled up. And we still, coming out of that recessionary, almost recessionary event, we saw ad spending still going up, but not in Google Network. Google Network crashed quite materially year over year during this period, and it's the only aspect of their business that's getting clobbered right now. So what is Google Network? Well, it is basically all the Google networks from Gmail, everything else, and blogs, where you can put display advertising. So the little boxes you see maybe on like a blog or a news site, that's Google marketing. That is probably part of Google Network. And the problem is people, when you used to look up something random and you'd say, I need to learn about this, you'd find a link, a blog link, you'd click on it and you'd go read through the blog that probably had some advertising on it. And I don't think people are doing that anymore, because this is the only aspect of Google's business. It doesn't matter what quarter you look at since that first Q of 2023. Look at from 8.2 year over year to 7.8. Every single quarter has gone down year over year. They have no growth in Google Network. Now, it is a materially large part of their business. It is generating $7 billion, but it's nothing to the elapsing 50+% value that Google search brings in at $50 billion. From that time, that first quarter of 2023 was only bringing in $40 billion. So they have a massive growth driver still since ChatGPT came out. And the only reason I can conclude why that is somebody told me, why would you click on a link on Google? Well, probably because you're looking up a specific product and you want to find a very specific thing, like a flight. You're going on Google probably to look for a specific thing that you want to buy, over perhaps maybe just using some of the knowledge tools like ChatGPT for like figuring out how to do books or summarizing things, where you won't get any advertising, kind of promoted to you in that sense. The future is concerning in this way, because how do you serve up ads or make money without charging, say, a monthly subscription? I mean, that's the disruption that people are concerned about. And the only people that really have the huge benefit is the other stock in my portfolio, being Meta. Meta has nothing to lose and everything to gain. Same with Microsoft and Apple. Google is the one that does have to forefront some of this and figure it out. But for right now, it's not disrupting their search as bad as people say it is. I mean, generating 50 billion and continued growth, I'm not worried about it right now for how cheap the company's trading, with all the cherries on top of the cake it has to offer. Baby self-driving, genomics, quantum computing, you name it, none of that's priced into the company right now. So I think this easily deserves what all these other companies are pulling in. Like if Microsoft and Meta can trade at 25 to 35 times multiples, Google does not deserve an 18 times at this current market value, meaning there's some substantial upside, with my average price being like 173, 174. I think we could easily get back to 250 at a 25, 30 times multiple. So I'm going to hold out till we get to that point. I'm not saying I'm going to hold Google forever. I just love YouTube. I don't think it's dying tomorrow, and I think it's being overpriced. So if we do get a reasonable balance, I wouldn't mind scaling it back to probably build out my S&P position overall. Because at the end of the day, like I told you guys, I'm trying to fast track some financial independence, pay down my mortgage, and start converting some of these growth vectors that, between the wife and I, only make up 15 to 20% of our combined portfolios, but inevitably putting them over in more wealth preservation assets like XEQT, VO, or VDY. But consider subscribing for future updates. Let me know what you think, of course, in that comment section below. And as always, I will catch you in the next one.